Hey everyone, welcome back to Maverick Money Matters. Today, we're diving into a topic that's essential for anyone looking to secure their financial future: investing for beginners. Whether you're starting with a little or a lot, understanding how to build your first investment portfolio is key to achieving your financial goals. So, let's get started with a step-by-step guide that's perfect for beginners. Step 1. Define your financial goals. The first step in building your investment portfolio is defining your financial goals. Are you saving for retirement, a down payment on a house, or perhaps for your children's education? Clarifying your objectives will help you determine your investment timeline and risk tolerance. Step 2. Understand different types of investments. Next, familiarize yourself with the different types of investments available. Stocks, ownership in a company with potential for growth and dividends. Bonds, debt securities issued by governments or corporations offering fixed income. Mutual funds and ETFs, pools of investments managed by professionals offering diversification. Real estate, investing in physical properties for rental income or appreciation. Step 3. Assess your risk tolerance. Understanding your risk tolerance is crucial. Are you comfortable with fluctuations in the market, or do you prefer more stable investments? Your risk tolerance will influence the allocation of your portfolio between stocks, bonds, and other assets. Step 4. Choose a suitable investment strategy. Now, select an investment strategy that aligns with your goals and risk tolerance. Passive investing, long-term approach with minimal buying and selling, for example, index funds. Active investing, hands-on approach involving regular monitoring and adjustments. Diversification, spreading investments across different asset classes to reduce risk. Step 5. Open an investment account. Once you've defined your goals, chosen investments, and assessed your risk tolerance, it's time to open an investment account. This could be a brokerage account, retirement account, like an IRA, or a platform for investing in mutual funds or ETFs. Step 6. Monitor and rebalance your portfolio. After setting up your portfolio, monitor its performance regularly. Rebalance your investments periodically to maintain your desired asset allocation and adjust for changes in your financial situation or market conditions. Step 7. Educate yourself continuously. Lastly, continue learning about investing. Stay informed about market trends, economic indicators, and investment strategies to make informed decisions and adapt your portfolio over time. Congratulations! You now have a solid foundation for building your first investment portfolio. Remember, investing is a journey, not a sprint. Start small, stay disciplined, and let your investments grow over time. Whether you're aiming for financial security, wealth accumulation, or retirement planning, investing wisely can help you achieve your goals. Thank you for watching. If you found this guide helpful, please give it a thumbs up and subscribe to Maverick Money Matters for more videos on personal finance, investing tips, and financial literacy. Let us know in the comments if you have any questions or topics you'd like us to cover next. Here's to your financial success.